Good morning, everybody. We'll give it a few more minutes to see if anybody else shows up. Okay, so we're going to talk a little bit about the difference between inflation and inflationary. What's going on in the market today, especially across the pond, how it's affecting us, especially with the oil rates, and what we can expect in the oncoming months through the rest of 2026. So, inflationary versus inflation. Inflation is sustained, broad-based rise in cost of goods and services that reduces people's purchasing power over time. What we're seeing now is inflationary. It is an event, a blip in time that is causing a situation that will cause inflation over a period of time eventually. So yes, we are seeing rising oil costs, and that will cause increased costs at the pump, will cause transportation costs to rise, could cause grocery prices to cost, and other goods and services to cost over a period of time. But at this moment, it is strictly an inflationary cause. Put simply, inflation is the outcome, inflationary is the pressure at its cause. What's happening in the world right now, it's awful. It's going to affect a whole lot of people. What we've seen in the last 2 days is another story. The liquid, um, uh, the gas attacks in Iran and Qatar, those are going to affect a lot of people over a long term. I don't know what it's going to do in the long run. Mostly, I think it's going to affect India and the European Union because it's going to take 3 to 5 years for them to build that back up after what the attacks in South Paz. But what we're dealing with right now is the effects in Strait of Hormuz, the attacks on Karj Island. Those are all going to affect us to an extent. But we have yet to see the oil prices rise as high as everybody has said. I mean, Iran said they were going to drive the prices of oil to $200 a barrel. And Trump said he was going to just keep doing what he's doing until Iran doesn't exist. Um, these are unfortunate circumstances. But yes, I mean, I just the other week I put in gas. It cost me $55 2 weeks ago. It cost me $72 last week. It was a buck 48 at Costco. Last thing I want to see is $2 a liter gas. But what we're seeing, the problem is what happens now is people are going to spend less. People are going to have less money to spend. This is not going to cause inflation. This is going to cause recession. I know nobody likes the R word. What this going to do is cause the Bank of Canada to have to cut further, in my opinion. Now, we just had a hold. I knew the hold was coming. But what happens in the future? I see cuts coming. Is it just going to be a quarter point here, a quarter point there? I don't know. But if things don't change, if the war doesn't end, if we don't keep, if the attacks keep going, we keep cutting further, if ships can't come through the Strait of Hormuz, oil doesn't get through to where it needs to go. I mean, Canada doesn't get any oil from there, but it still affects everybody else because oil is a global commodity. So though that price of oil per barrel affects everybody, not just US, not just the EU, not just India, China, Russia, affects everybody. So right now, I think it's Brent oil is a buck 10 a barrel. I think last time I looked, but it was as high as a buck 20, and it's come back down a little bit. So we have to watch what's happening there. Inflationary price, and here's another thing: real estate. It used to be the three main drivers of inflation: groceries, gas, real estate. Real estate has kind of decoupled itself from the economy. A lot of people assume real estate needs a strong economy to recover. It's not true. Real estate is already starting to recover despite the fact that we are in not the best economies. Real estate is often the first to recover in a recession. First in, first out. It will drop like a stone and rebound fast because people want to get in when it's dropped, which is where we are right now. Our market is as depressed as I've seen. I've only been in the business for 3 years, but I've been looking at homes all my life. This We're in a 20-year low right now when it comes to housing prices and depression. We've never seen a drop the way we have. And here's another quote. Here's another thing I learned from another mortgage friend of mine. You go back to the 2008 recession, you go back to other recessions before that. Housing market has never had a crash after a crash. So what we've seen, a crash like we've never seen before, there's not a trap door sitting there. So yes, while we are dealing with inflationary issues right now, I don't think we're going to see inflationary problems. Inflation problems. I don't think inflation is coming up. I think what we're going to see is that rate drop, maybe summer, most likely fall, and I think we're going to see more than a quarter point. I think we're going to end up by the end of this year down at 1.75, maybe 1.5. Now, this affects variable rates. It does not affect fixed, and we're seeing that already. What we're seeing are fixed rates jump. 2 weeks ago, you could get a fixed 5-year insured, 5-year insurable if you're under 65% for 3.89. You cannot get that. You can get 4.14 maybe, but that's about it. The reason for that is fixed rates are connected to bond futures. So if the banks don't think people are going to spend, the banks don't think people are going to invest, they're going to get their money elsewhere. And that means raising mortgage rates. So they're guessing that because of what's going on, people are going to have less money to spend and they're not going to put it where they want them to put it. So they're going to go get it elsewhere. And that means mortgage rates. I don't know how high they're going to go. They've jumped about quarterish point at this point. We'll have to see where they go. I think if the bank cuts, they'll drop. We'll have to keep an eye on it. But I know these are scary times. War was supposed to be over in 24 hours, a couple of days, a week. We're into week 3. Um, the war in Russia was supposed to be in 3 days. They're into year 4. Um, keep an eye on it. If you have any questions, I will answer them as best I can. There is no easy answers for this stuff. I don't believe, as I said, inflation is on its way up. I believe this is a blip. I believe this is going to be over, not as fast as everybody thought. I don't think it's going to last as long as people are scared about. When it's over, prices will come back down. Real estate responds more directly to affordability and cash flow than headline economic strength. And affordability comes down to 2 main things: home prices and interest rates. That's why people should be watching. Look, home prices, I've talked about it yesterday in my seminar. People are willing to come into the market we're in. And I don't think the oil prices are going to change it too much. I hope it ends soon. I hope it ends without a whole lot more tragedy. The natural gas attacks the last 2 days are going to affect a lot of people for a long time. That is my biggest concern when it comes to the next 3 to 5 years. It's going to take time to rebuild that. Literally took out the largest natural gas reserves in the world, natural gas refineries in the world. That's going to affect the EU a lot. It's going to affect the UK, Italy, France, India. Just have to keep an eye on that. But here, we are pretty well sheltered. We are just affected by the oil prices. We have no control over that. So, guys, if you have any questions, feel free to reach out. Um, I don't know everything about this. I know a lot of people that know some good stuff. I'm happy to put you in contact. I'm happy to reach out. Have yourself a great day, guys. If you need anything, you know where to find me.